So we should restore boring banking, the kind of banking that John McFall described this morning as Captain Mannering type marketing, type banking. Now, he and a lot of other people have said or been told that this is not actually possible, that financial innovation means that global financial markets are now much too complex to have that kind of structure. That is actually, in my view, just the opposite of the truth. It's not that financial innovation makes that kind of structure possible, it's that financial innovation actually makes that kind of structure a lot easier to introduce. The text I use for these purposes goes back 20 years to a book by Lovell Bryan called Breaking Up the Banks. Lovell is now head of global banking practice banking strategy practice at McKinsey. And in Breaking Up the Banks, he explained that the likely outcome of financial innovation was that we would have specialist providers of all the individual services which were traditionally encompassed by the old-style bank. In saying that, Bryan was half right and half wrong. He was right in that almost all the services which were historically provided by banks, the individual services, are now provided by what in the retail area are called monoliners, that is, firms that specialize in that particular business. So there are many more specialist product providers than there were. But he was also wrong in the sense that the same period has seen the growth of a limited number of very large financial conglomerates. If one asks why he was half wrong, the reason is basically a very simple one, which has been hinted at, though not spelled out in the discussion this morning, which is the sheer scale of the retail deposit base is so large that getting hold of it is irresistible to traders and investment bankers. And that is what they have done, and that is fundamentally the source of the problems which we have today. Some of you may have read the recent article in The Atlantic by Simon Johnson, in which he likens the power of investment bankers in Britain and the United States to the power of the Russian oligarchs or similar oligarchies in developing countries. And while this may be overstating to make the point, there is a correct central issue there, which is to say what happens in a society when individuals become too rich and too powerful is they establish a symbiotic relationship with the political class, which leads to a reinforcement of that power and influence and wealth. And that is exactly what has happened in Britain and the United States over the last 20 years. And that is the nexus that needs to be broken. And it's only by the existence of that nexus that we can explain the extraordinary fact that the governments of Britain and the United States have provided unbelievably large amounts of money to the financial services sector without imposing any substantive conditions on how that money is used or without demanding any meaningful reform of the way in which these institutions cooperate their affairs. So what we need then is structural reform to separate the utility from the casino, what has already been described this morning as narrow banking. And what I mean by a narrow bank is an institution that takes deposits and invests them exclusively in a limited, defined group of safe assets, which are basically government securities and equivalents. Narrow banks would take deposits and would have a monopoly of legally taking deposits. They would also have a monopoly of access to the money transmission system. They would be the only institutions which would be allowed to call themselves banks, and they would be the only institutions which would qualify for deposit protection or any other kind of scheme of government support. Narrow banks would be allowed to engage in consumer and small business lending and would be encouraged to do so, but they needn't do so, and other institutions might well engage in consumer and small business lending. Narrow banks could be owned by larger or more diversified financial institutions, and in the short term, they probably would be, so that Barclays Bank, a narrow bank, would be a subsidiary of the Barclays Group, but a subsidiary that was a narrow bank that were operated from physically separate premises, and a narrow bank that was subject to the kind of restrictions that I described, in particular the kind of reserving requirements that it would effectively insulate the activities of that organization from the rest of the Barclays or any other group. And I'm only outlining the main elements of this solution today. You can see there's quite a lot of detail to be filled in, but there is no doubt that with modern financial innovation, one can actually restructure the financial system in this way to restore banks that are not quite the same as the Captain Mannering banks, but are at any rate banks that are recognizable to the British public as being the kind of banks that they used to deal with and the kind of banks which they're actually justified in having confidence in. And most, as I say, of the rest of the structure of wholesale financial services regulation ought to be left to market forces to deal with. Now, the final criticism which will be made of this kind of proposal is that now is not the moment for these kind of radical restructuring. We should get through the wider economic crisis first, and we can think about these longer-term issues after that. I think the truth is the right position is exactly the opposite of that. Once again, we're getting things just the wrong way around. I've already described the degree to which the financial services industry has become, for 2 decades, by far the most powerful industry lobby in the country. We have today a British government that is almost completely beholden to it. Otherwise, I described, it would not have behaved in the way in which it actually behaves. We have a moment at which the continued existence of these financial conglomerates is essentially wholly dependent on direct and indirect measures of government support. If we are not in a position to insist on and implement reforms at the moment, we will never be in a position where we are able to insist on and implement reforms. And what we need to do in Britain today is to build a consensus both on the need for that reform and on the specific measures that are actually need to be implemented in order to do it. Thank you all very much.